Welcome to the Grow Your Business and Grow Your Wealth podcast with Gary Heldt. Gary is an expert in helping business owners put together a plan that will provide a better future for their businesses, themselves, and their families. On the podcast, Gary interviews other professionals who share his vision, and together they share secrets and strategies any business owner can use to build a better financial foundation for your business and your life.
Welcome back to the podcast. Today, our guest is Chris Kampitsis, and he's with the SKG team at Barnum Financial Group. Welcome, Chris.
Hey, Gary, thanks for having me.
So tell us some about yourself and how you got into the finance industry.
Sure. So it was, the Great Recession, the beginnings of a lot of fear and panic in the market. And I realized that there's nothing more I'd like to be doing than helping people figure their way through difficult financial situations. And so I realigned my education, and I focused on getting my degree in finance and ultimately getting into a career in financial planning.
So now at Barnum Financial Group, you are part of a team inside of that. What does your team specialize in?
Sure. So very fortunate to be a part of a great team. The SKG team, we're having our 10th anniversary this month as a team. My partner, Ben, founded the team, and what we specialized in since the beginning was primarily helping individuals inside of corporate America understand their benefits, understand their goals, aligning their work-life balance, and ultimately developing a financial plan for them to get to retirement on their terms. Since then, our targets have shifted slightly in that what we ended up finding was that we would get a lot of referrals to business owners. So we since also developed quite a bit of a specialty in working with small business owners. And I would say, if you said what are our team's two target markets, if you will, or areas of specialty, it would be corporate leaders and small business owners.
Good. Now, you've also gotten a designation that has to do with, with exit strategies for business owners. Can you tell us some about that?
Sure. So I am a certified financial planner first and foremost, but Ben and I, a few years ago, we became involved with an organization called BEI based out of Denver, Colorado. And we went out to Denver and we studied and earned a designation called the CExP, or Certified Exit Planner designation. There's only about 300, maybe 350 certified exit planners in the country. And basically what this designation does and this discipline focuses on is developing an exit plan for your business the same way that you would develop an exit plan from your corporate career or a financial plan for your family.
Okay. So, again, it goes back to planning. Same thing that you're saying that an individual would do. The business owner's doing the same thing, kind of plan their strategy out. Now, in doing this, how many of these business owners does it take longer to exit than they think it does?
So that's a funny question, because what we find is when you talk to most business owners, in their 50s or early 60s or early 70s, and you say, when do you plan on exiting the business? The most common answer you'll get, tell me if I'm wrong here, Gary, is 5 years. Right? Everyone says 5 years from now. But if they don't have a plan, if you talk to them in 5 years, they're going to give you that same exact answer. About 5 years from now. So just like anything else in life, if you don't have a plan, chances are you're not going to hit your goal.
Right. So, you've been doing this for a while now. What is it that you wish that you knew when you started that you know now?
I think the biggest thing that I wish I knew when I started that I know now is that ultimately we're not for everybody,
Mhm.
right? We can't be all things to all people. You have to have, I believe, as a professional, an approach that is uniquely yours. You have to have conviction behind the things that you believe in. You have to have a process that you stick to. And people either gravitate towards that, understand it, and want to sign up for it, or they just have a different style and approach and it's not for them. And you have to part ways as friends. So I think too many professionals try to be all things to all people, and ultimately it's not the right thing for the client and it's not the right thing for the professional.
Right. I agree with you 100%. So what are some of the questions that you wish that the clients were asking when they first come in to see you?
Sure. So, if I was a client, uh, I'd want to understand first and foremost how my advisor or planner uh, gets compensated. I
Mhm.
think that's very, very important. I'd want to know, is the person that I'm working with a fiduciary? Uh, that's very important to know that they are legally bound to put your best interest first and foremost. And to me, those are table stakes. Those are sort of the standard interview questions. But then I'd want to understand philosophically what their approach is to achieving objectives, what my expectations can be in terms of service going forward, and really just make sure that our values align. I
Right.
think that's really critically important.
Now, you mentioned, somebody being a fiduciary. Tell our listeners, what does that mean?
Yeah. Basically, that means someone who is responsible for putting your interests before theirs. It doesn't necessarily define how they're compensated or what tools or products or services they can use to solve a situation. But at the end of the day, are they required to put your interests ahead of theirs, and do the right thing by?
Now, how can you tell if somebody's a fiduciary without just flat out asking them? I mean, is there a designation that you have that
Yeah.
makes you a fiduciary versus one that someone could have, someone that could be in this industry that wouldn't be a fiduciary?
Well, all certified financial planners are required to operate in accordance with the Certified Financial Planner Board of Standards Code of Ethics.
Mhm.
So that is a great way to start.
Okay. Um, what are some of the biggest fears that your clients have coming into you, and how do you help them overcome those fears?
It's a good question. The biggest fear that most clients have is just not knowing if everything is going to be okay.
Mhm.
Not knowing if all the things they've put in place, their life's work, ultimately, when they do decide to finally let their foot off the pedal, if things are going to work out. We're so used to working in the business, to working in our career, to all of a sudden just pump the brakes, no longer have quite the same amount of cash inflows. In some cases, the expenses actually go up instead of down. Just knowing, hey, am I going to actually be okay? And I think that provides a lot of peace of mind when hopefully they find out that they are going to be okay.
Right. So what are some of the common mistakes that you're seeing people make?
The single biggest mistake that I see people making is retiring first, selling the company first, and then doing the planning for their next steps. It's unfortunately far too common and far too often that we will get referred to incredible business leaders, C-suite executives of these unbelievable companies, and they never bother to take the time to actually do the analysis before they, put in their resignation to find out, am I going to be okay?
Right. So besides somebody being, besides you being a fiduciary, what are some of the other reasons why somebody should use a professional like you to help them with their life savings?
I think when it comes to financial planning and the act of putting together a financial plan, I think it's really critical to be able to have a professional that you can bounce ideas off of, just like a good CPA. Hopefully clients are bouncing ideas off of you, Gary, all the time. I know they are. But then to be able to run hypotheticals and what ifs. So, what if I buy that second home? Or what if we do that downsize? Or what if I relocate to a different state with a higher tax rate or a lower tax rate? It's nice to be able to model those different scenarios and compare one versus another. It's certainly possible to do it on your own, but when you look at the level of experience required, the cost of the software required, and the experience needed to get the most out of it, you're typically going to end up saving a lot of time, which is your most valuable asset, if not also a lot of money in working with a professional to do a financial plan. On the asset management side, when you spend your whole career, you spend your whole business livelihood building assets, right? Building equity in your company, building your nest egg in your 401k. And I have to tell you, the climbing up the mountain part is difficult, but the climbing down the other side of the mountain safely, distributing the assets, getting through the difficult market periods, that takes another level of sophistication. And it takes a little bit of an extra layer of gut check sometimes when things aren't going too well, and a little bit of behavioral finance comes into it, and coaching. That's where a true advisor can add a lot of value to the equation.
Right. Now, so again, you've been doing this for many years, and you have a wide range of clientele. What's the one thing that you've learned with dealing with people in such a vast background that they have?
The losses hurt more than the gains help. Mm-hmm. People get a lot more heartburn, lose a lot more sleep when their finances, the stock market, their personal lives are going through a moment of turmoil. Right. When things are going well, the market's up, business is good, it's great. But when things are going bad, it hurts more than the good times feel good. That's for sure.
Right. What, because of COVID, how has that changed your business?
COVID has changed our business in a dramatic fashion. Some not necessarily, frankly, for the worst. Mm-hmm. I think it's been a fast forward on the adoption of technology. It's been a fast forward on the increased efficiency as it pertains to time. Where we used to do, let's say, 20 to 30 meetings a week, 2/3 of them were in person and 1/3 of them were by phone. Now I'm probably doing 30 to 40 meetings a week, all via Zoom.
Right.
Or Teams or similar technology. And it's I don't know that clients are going to have the same willingness to get dressed, to hop in the car, to set aside the time, to come to the office. Once in a while, there's nothing that can replace face-to-face.
Right.
But there's a lot that can be done via screen share that I think is just going to save people a lot of time when they're dealing with their professional advisors.
Yeah, I know we have seen it where people are actually excited about it because if they're running late, they can still meet with us from their workplace. Or if they're at home, something happens, a kid gets sick or whatever, they're still able to meet with us, as compared to when it's face to face, not so much. We've definitely found that it's more efficient. But we still have the people that want to meet, face to face with us. So, I'm in agreement with you. Has changed a lot of things, and I don't think all necessarily for the bad. That's for sure. What are some of the biggest challenges that, non-COVID, that you guys are facing?
So, there's been a tremendous uncertainty in this country in terms of the political environment.
Right.
And, regardless of what side of the aisle that you stand on from a politics standpoint, the impact that might have on investments, if so-and-so wins versus the other, what that might happen on taxes, one side versus the other, et cetera. So there's just a tremendous amount of uncertainty that people have. And some of it is valid, a lot of it may not be. And I think ultimately that's where financial planning becomes so critical, because it's so easy to get swayed by the headline. It's so easy to get swayed by the news report and to overreact to short-term current events. But if you have this written plan and you're hitting your goalposts, you're hitting your markers along the way, that really helps to keep you centered and keep you focused on your long-term goals. Right? It's not about where my company is going to be necessarily this year. It's where do I want my company to be 5 and 10 years from now? Where do I want my 401k to be 5 and 10 years from now? That's what really matters. So, we need to adjust based on what's around today, but we can't overreact to it.
Right. I agree. When you're talking about setting the goals and hitting the goalposts and things like that, how often do you guys meet with your clients?
So we offer a couple different packages based on what they're looking for. For most of our financial planning clients, where they're working with us on a regularly updated plan, it's going to be typically quarterly.
Mm-hmm.
Some clients we meet with every other month, and for certain clients, they really want that monthly touch base.
Right. Somebody new coming in and looking for advice and just had never really truly used a planner. What would your minimum recommendation be to them of how often they should meet with their advisor?
So what we'll typically do, just as if I think you went to a doctor's office and you had a physical done, we try to assess where they are today in relation to their goals, and then we provide a prescription for their particular situation. So for some people, it's going to be a lot of hand-holding, a lot of rehabilitation, a lot of reorganizing. For other people, it's more so you're doing all the right things. You just need a little bit of accountability. You just need a little bit of a check-in. But in general, if you're starting a new planning relationship, I would think at a minimum, it's 2 to 3 meetings of really making sure that your planner understands you and you understand them. And then for the first couple years, I would check in at least every 6 months to ensure that you're speaking the same language.
Obviously, a lot of people have heard of Bernie Madoff and the different other people that are out there that are like him. What do you recommend for people that are afraid of that type of situation? How can they safeguard themselves?
That's a great question. The biggest thing that I can suggest is you want to make sure that there's a separation of church and state, or checks and balances, if you will. So the person actually managing the money isn't the firm printing the statements.
Okay.
Most quality asset managers and financial advisors will typically use what's known as a custodian.
Mhm.
And the custodian is typically a very well-known national institution where the assets are held. And typically they're the ones who are actually the ones responsible for the accounting and the sending out of the statements. That's very important. And that was something that was missing in that particular situation.
Right, right. So over your years of doing this from a business side, what's your one piece of advice that somebody gave you that has really stuck with you over the years?
What's one piece of advice that someone's given me that's really stuck with me? It's my partner Ben, when I started in the firm, write down your goals. For me, it was so important to write down my goals of the advisor that I wanted to grow to be, the way that I wanted to help people, the way that I wanted to grow my business, so that I can look back a decade from then and see that I accomplished those. And I think that is so important. If you're a business owner, every business owner creates a business plan when they start their business. How many business owners revise their business plan? The business has been in operation for 3 years, 5 years.
Right.
You should be updating it every year. Same thing with individuals and families. My wife and I, we had a conversation, and we talked about how I didn't want to become the story of the shoemaker's daughter. I wanted to make sure my wife and my children were getting the same financial planning advice that I was giving to other people. So we determined that we need to put together a financial plan for ourselves, because I knew it all in my head, but she should see it on paper too. It shouldn't be just assuming this is Chris's department, he's going to take care of this.
Right.
So it's so important to write things down and to have an accountability partner, whether it's your CPA, your financial planner, both, a best friend, whoever it is.
Right.
You need to be checking in with someone on a regular basis.
Right. I agree with that wholeheartedly. So, Chris, what have I not asked you today that you wish I would have?
What have you not asked me today? Well, can I throw one at you, perhaps, Gary?
Sure.
So how do you think the asset managers, the financial planners, and the CPAs can work together better on behalf of their clients? Because I think you've probably, like me, had some relationships that were wonderful and synergistic,
Right.
and some not so much.
Yeah, no, I agree with that. I think that one of the big things that people don't do is that they don't build their team of people and create a plan. And then, just like you said, most business owners, they do that business plan because they were told that they needed to do that to get their capital to start their business, and they don't revise it. I think that many times people are afraid to have their CPA talking with their financial planner because my CPA is going to send me a bill for this, where we can definitely be more proactive in the tax planning side of things if we are talking, because lots of times you may not have all of their assets, And if you don't have all of their assets, how do you know what loss carry forwards that they may have that aren't part of the portfolio that you're managing? They may have rental properties, they may have other things. And if there's not that discussion, and I try to tell my clients all the time, it's like, let's have a meeting with your financial advisor. Not going to charge you for it. Let's just sit down and talk. So then this way we make sure that we're able to, from a tax strategy standpoint, do the best for you, that we can. And I think that the financial advisors lots of times, that I've seen think that we're trying to do their job for them. And I can tell you most of the time, CPAs don't want to have anything to do with where the money's being invested because that's so far outside of our wheelhouse. We just need to know the tax ramifications, or we know the tax ramifications. We just need to know what income is coming, what's happening, in just doing that planning. I think is extremely important. I try to tell my clients that I think that I should talk with their financial advisor with them on the line twice a year. I want to know, mid-year, where are we? Do we need to change estimates or not? And then also in December, when the mutual funds and stuff pay out all their capital gains. So then that way we really know, what we need to do there at the very end of the year to make changes in estimates. I think that's one of the biggest issues in, not just my industry, but your industry, that there's not that collaboration that there really should be.
I'll take that one step further and say, if you're a business owner or you're a corporate leader and your timeline is, 5 years or less from making your move, and you haven't gotten your team in place and had a conversation, your insurance professional, your attorney, your CPA, your financial planner, your wealth managers, getting everyone on a Zoom, getting everyone in the meeting and saying, hey, this is where I want to be. Let's get on the same page here. I think that is so critical. I don't think that has to be, every meeting,
Yeah.
but it's definitely an important piece of the puzzle.
Yeah. I mean, and, Chris, that's the reason why I wrote the book, the right team, the right plan. And that's what it's all about. It's building the right team so you have a plan, and don't be afraid of everybody getting together and discussing something. I think that you're going to, be better off. I mean, many, big companies have a board of directors or a board of advisors. And to me, that's what your financial team really is. It's a board of advisors, to help you get to these goals that you've set for yourself.
Couldn't agree more, Gary.
So if our listeners like what they hear, how can they reach out to you?
Sure. You can visit our team's website at skgbarnum.com. You can learn more about us. You can click to schedule a meeting right then and there. And we're happy to have a conversation and see if we're a fit.
Great. Thank you for joining us today. And our guest has been Chris Kampitsis with the SKG team at Barnum Financial Group.
Gary, thanks so much for having me. Have a great day.
You too.
This show has been produced by Market Domination, LLC. To discover how you can have your own show completely done for you and turn it into a real published book and become the authority in your marketplace, go to www.marketdominationllc.com/